Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So to start off the week, folks, here, we saw the markets, the equity markets, kind of pulling off just a little bit. We actually were down quite a bit more intraday. We managed to bounce off some key support levels and close the day, for the most part, marginally unchanged here, just a little bit negative. We saw gold actually catching a bid today. We saw the bonds catching a bid, and the crude oil still stuck in a bit of a range, and we'll see all of this on the charts. But as always, we're starting off our analysis here with the S&P 500s on the dailies. And so, folks, still no resolution here to this bit of a balance we've been forming here since the early part of December of last year. This is the larger balance down here from like the 2230s up into the 2280s. And folks, as I take a look at these S&P 500s, one of the things that I was mentioning to our trading room was potentially, if you start getting down below these 2260s here, you could start to see a bit of an offer start to build, a bit of a sell-off or a pullback start to build. And the reason being because you start to undercut some of these prior lows. What's going to happen is you're probably going to have some sell stops that are parked right down below them. So when you start to undercut these levels, the potential exists. It's not guaranteed, but the potential exists for the momentum to start building at these points. As sell stops are triggered, then that drives the market down enough to trigger the next set of sell stops. So folks, right here, if you get below down these 2260s, you could potentially see a bit of an offer build. In fact, I was telling our room here, our live trading room, that watch this area, because we started to undercut it right before we headed out into the lunchtime hour in the on the East Coast, and we started to see a little bit more energy and activity as sell stops started getting hit. But as soon as we started kind of ramp up in terms of energy and sell-sided activity, it kind of just dissipated and we ground higher throughout the day. So folks, still no resolution, still no directional bias, and as I've been mentioning over the past few videos here, I don't think we're really going to see anything to the upside until we get up and over the 2280s, and really honestly the downside probably the 2230s. So we're still stuck in a little bit of no man's land, stuck in a bit of a range. Also, moving over to the Nasdaq here, the Nasdaq actually was the leader on the day. We saw most of the day here pass with the Nasdaq just battling to struggle it out with break even or green. In fact, if you look at the Nasdaq, it's a $5,000 index, and it only closed down $2 on the day. That's 0.04% on the day. Volumes pulled back across the board on both the S&P and the Nasdaq. That's a good sign. And we actually closed in the upper half of the range on the Nasdaq for the day. So all of these things point to maybe a day of a bit of testing of some sell-sided stops here down below, but really no big damage done to the indices, both on the Nasdaq and the S&Ps. And notice how the relative strength here still kind of slanted a little bit to the upside here, a little biased to the upside. So we do see that Nasdaq strength reappearing, and as we've been mentioning, a lot of tech stocks are forming a handle. And in fact, over the last 4 or 5 days, as you've seen the Nasdaq kind of go sideways here, a lot of times you see like the Amazon kind of forming the handle, the Facebook kind of forming the handle as well. Even Google tried to break out earlier on Monday, and actually it did get up into new highs. Look at that. So Google breaking out with earnings coming up in 3 days. So folks, we have the Nasdaq leading the way with some strength. And as always, we'll continue to watch this to see if there's any additional distribution days that start picking up. As we move over to our additional markets here, taking a look at the crude contract, let's back out of this chart just a little bit. Here we go. So this is what I've been mentioning. Look, it is just stuck in a range. 51's down below and 54's up top. Those are the two places I'm looking for here. Keep in mind, this Wednesday we've got crude inventories on deck. That potentially could be a bit market moving here for the crude contract. Taking a look at the bonds here. Bonds actually caught a nice little bid. So folks, we've been in a bit of a range here too. Kind of the 125s is the top end, 123s is the bottom end. My expectation at this point is a bit of an offer against the bonds here, but anything could happen. If you do stage a breakout above the 125s, you could see a run all the way up to potentially even the 128s. That's a bit of this trend line here that was forming since the latter part of June of last year. So folks, again, just like kind of with the gold, if you can break out from some of these prior highs, you might catch a little bit of a bid coming into these prior resistance areas. And then speaking of gold here, taking a look at the GCs, you can see how we've been forming this balance right around the 1200s to the 1220s. We've made a few attempts on Monday to try and break out of those 1220s. So far, all those attempts have been somewhat capped out and limited in nature. But if you can break out above those 1220s, folks, as I look at this charts, that could be an attempt up at the 1250s, that's that last area of support and resistance that gave way. So folks, as we take a look at this, a break above 1220s, that's probably an attempt at the 1250s, and a break down below the 1200s probably have a bit of retracement back into this move from the lows down near the 1120s. But that's kind of what we've been seeing here in terms of our external markets. Switching back over to our stocks here, folks, one of the things that I just wanted to mention is as we're starting to see signs of maybe a little bit of stalling, a little bit of volatility kind of coming back into this marketplace, I thought it was interesting that our last position finally stopped us out. We actually took this Shopify back here as it was breaking out of this little shallow handle here. That was back on January 4th, so just 2 days back from our trading year here, January 4th, and now we're getting stopped out January 23rd. Beautiful, beautiful swing trade. But one of the things I pointed out to our room is what I've noticed is that none of our long-sided trades have pulled us in. So we haven't had any new longs that have been added to our swing trades, yet a lot of our trades have stopped us out. A lot of them like this in the Shopify have been profitable. But it's interesting to see that as the market's kind of getting a little volatile, you're starting to see a little bit more downsided activity. Definitely a difference versus early December last year. One of the things I'm just kind of noticing is that I think it's interesting that our system, our trading system, is actually forcing us into cash, right? It's not pulling us into any new net longs, and it's actually pushing us out of the longs that we currently have at a profit, and then we're kind of left in a place with a high cash level and very low equity trades or investments going on at any point. And this, folks, is a huge tell as well. So we look at distribution days, we look at support and resistance days, but you have to also look at what your portfolio is doing. That's real-time feedback coming back from the market, especially if you follow a system and you're disciplined and you follow the rules and the signals the system gives you. When all of a sudden you start finding yourself more and more in cash, potentially that's the market signaling that it needs a little bit more of a break. Maybe it's getting set up for a little bit more of a pullback. But either way, even if it rockets higher, folks, you're going to have your stocks ready there. You're going to be looking for breakouts. You're going to have cash available to execute and act on these trades. But if for some reason the market does continue to sell off, folks, you're in a very defensive posture. And that's a key point about using a rules-based trading system. So other than that, folks, we're going to continue looking for the best relative strength stocks, breaking out of chart patterns and on volume. And we just wish all of you a great trading day ahead, and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that Show More right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.